Let's talk about it. Let's talk about the current state of, I suppose, the second chapter of the meme mania stock craziness. I want to chat about old GME, and in all reality, I want to have a discussion of why the price has been not so bueno. I want to get into the exact metrics of what's actually causing GameStop's price to truly fall, and also I want to get into a little bit of a talk about what to expect in the near term, and of course, I'll be sharing my own personal thoughts on how to best handle high probability that we're going to have some crazy times ahead. Now, before we get into all of that, just in an effort to be as transparent as I possibly can be, I have no GameStop position. I am not long, I am not short, I don't have calls, I don't have puts, and that's all for a very, very good reason. So when I'm sharing my personal thoughts on it, I'll be explaining exactly what I'll be looking for to actually create a position. So that'll be at the end of the video. But we have a lot to get into, so without further ado, let's rock. I don't want to spend too much time on this, but I think it's pretty important to spend a quick minute on how we got to where we currently are. So GameStop, obviously in 2021, it was the OG. It was the granddaddy of them all. GME was the reason meme stocks are even meme stocks. And that has a lot to do with Keith Gill, AKA Deep F and Value, AKA Roaring Kitty. And all of those things are important to understand what's going on now. So in the recent chapter, people noticed in May of 2024, right here on the screen, GME started to pick up. The price action started to pick up. And also, if you look at the derivatives market, specifically talking about calls, some player was buying with size. Now, as soon as this happened, people right away started to remember what happened in 2021. And they said, oh man, is it going to go again? Is it going to squeeze? What's going on? What is the short interest? Who is the player? Why is someone buying? There was a lot of questions. The only thing we definitively knew was that the price was going up. And then all of a sudden on May 12th, Roaring Kitty, for the first time in about 3 years, made a public post. The guy in 2021, after the whole SEC, or really wasn't even the SEC, it was the government who was questioning him and the craziness of 2021, he went dark, he went silent, no one heard from him. Now, I do want to point out that he just kept posting, like it just keeps going and going and going. Lots of memes. He probably used the 3 years in all reality to get all these memes, to get all these gifs, to get all these jokes. But if you look at his Twitter, it just kept going and going. It just doesn't stop. He just kept going and going. It truly would take 3 years worth of work to capture all of this. But anyway, that happened on May 12th. And if you notice, that was actually right around here. Let me actually mark this out for everyone. So this is the first trading day since then, right here, May 12th. So someone was buying options. I'm like, okay, is it Roaring Kitty? And then all of a sudden, he made his very popular return to the internet. And right away, GameStop just went nuts. It ran up to 64.83 2 days later. Absolutely crazy. But at that point, everyone's like, well, does he have a position? Does he not have a position? So the stock ripped like no other and then came down and down and down. And it was like, okay, where are we? We see that the price is holding before, but is there going to be a whole nother leg? What's going on? What's not going on? And then once again, we got another massive update. Technically on Sunday, it was June 3rd, but the first trading day, it opened up at 40. And what happened there was not only did Roaring Kitty make his return by just posting memes, he's now back on Reddit and he gave us his position update and it was huge. He had 5 million shares and 120,000 calls. This means he had exposure to effectively 17 million shares of GameStop. At 5 million alone, that made him, depending on how you're counting it, either the fourth or the fifth largest shareholder. But then when you look at actually the calls as well, I mean, he's literally up there with Ryan Cohen. Absolutely nuts. But anyway, as you can see, the account was valued at $210 million. And then all of a sudden, everything made sense. When people said, oh, we see all these calls being bought, who is it? Then we see Roaring Kitty, he's back on Twitter, or actually I should call it X. That went crazy. And they're like, oh, I bet it's him, I bet it's him. Well, fast forward to June, and that's when we officially got the update that it was him. But the story didn't stop there. In fact, just a couple days later, Roaring Kitty then made his return to streaming, and this was on June 7th, and it was a monster show. At one point, there was over 650,000 50,000 people watching this stream. Mainstream media was covering it. It was that big of a stream. It was that influential, and for good reason. I mean, as you can see in the chart here, GameStop's market value was swinging by billions and billions and billions of dollars, but just to mark out the day that it was right here. Obviously, during the stream, he was commenting on it of like, oh, like, watch if I say this, and he was kind of overlaying it with the price going up, going down. But through all this, it's just clear craziness. Billions of dollars added, and then at one point they were talking about an at-the-market offering. They actually now have the company. This is crazy. GameStop as a company is now sitting on over $4 billion worth of cash in hand, and they have no debt, folks. So that's going to be a very important metric later on in this particular video. But anyway, they had an at-the-market offering, and obviously, they very quickly were able to close it, so the stock really liked that. Then we had Roaring Kitty, he was talking. And then right after that, if you look on Thursday, June 13th, this was when GameStop was supposed to have its annual shareholder meeting, but it was such a popular thing. There was so much demand to get into the stream that actually just didn't work. So then they fast forward that to this previous Monday, and that happened on Monday, the 17th. And you're gonna, unfortunately, that was a red day. And why was it? Well, if you listen to it, there just wasn't much going on. It started off with a Q&A, and this was the leadership team of GME, and they're saying, oh, okay, like, well, I don't see anything else going on. There's no pertinent questions, so I guess that's it. Like, there wasn't a big reveal of what they're going to do with all that money, and that obviously could happen in the future, but I'm just saying on that particular call, there wasn't anything new. But throughout all of this, people are obviously asking, what was Roaring Kitty doing with his position? And he wasn't updating us every single day, but he gave us a fair amount of updates. You could see June 2nd, the 3rd, the 6th, the 10th, the 13th. I mean, at one point, specifically what we saw on the 6th here, when it was really ripping, he was worth over $500 million. I mean, these updates were truly insane. You can see the massive swings. Imagine actually stomaching that, of your account going from $586 million down to 235, up to 268, just huge swings. But that wasn't the only thing that was impressive, or I guess noteworthy, I should say. On June 10th, we could see here that he had 5 million shares and 120,000 calls. That's what he had this entire time. Every time he was giving us an update, that position was pretty much it. But then it all changed on June 13th. Instead of having 5 million shares of GME and 120,000 calls, his position was switched to 9 million shares. So does that mean he exercised all of them? No, because if he did, he'd have 17 million. So basically what he did was he turned some of it into cash to use whatever he wants with it, and then rest of it into shares. So he went from 5 million shares and 120,000 calls, exercised some of them, and transformed it into just over 9 million shares. At that ownership, he is the second largest owner. It goes Ryan Cohen, the CEO and chairman of GME, then Roaring Kitty. And then past that, you have Vanguard, past that, you have BlackRock, and the list goes on and on and on. But I mean, take a second to appreciate that. How crazy is that just a singular dude who is streaming, doing content, is now the second largest owner? Absolutely nuts. So anyway, obviously the account, at least as of the most recent update, was worth 268. And with this, as he was doing this, you can't just simply move 120,000 calls that easily. So as this was happening, you could see it kind of in the chart here, the transition of he had a stream and the stock kind of went down and down and down. And this is going to get really deep into market structure, and I don't think this is necessarily the best medium or the purpose of this video. When you unload that many calls, the market makers who were selling him the calls, well, they can unhedge their position. They unhedge their position that by selling the stock that they were buying when they were hedging it to sell it to him. So they're unhedging. They're literally just getting rid of the stock that they had to buy in case he chose to exercise all of them. So that just naturally created some selling pressure. But right now he's just in pure stock. And I think that's for a very important reason. So before I get more into like what's to come and what the sell-off is, like there's so many things here where I see it on the internet, it takes it one way and it just like likes to create a story. And it's like kind of the old saying of don't let the truth get in the way of a good story. And they talk about the shorts and whatnot. First of all, this right here, I would argue, and actually all the data suggests, this isn't shorts. The price did not come down because of shorts. In fact, we actually see that some of the shorts covered. I mean, look at what's going on with Citron Research and Andrew Lepp. They covered their short position, which would have actually added to some buying power. Why we saw a decrease recently, not all the time, I'm just talking about the recent decrease in price, is because the aggressive call bets in GME were no longer there. people who were buying and buying and buying calls decided to close the position out. When you close out a bunch of calls, whether you're locking in your profit or locking in a loss, but when you're closing out your calls, the market makers who sold all those calls, once again, not just for Roaring Kitty, but for everyone in aggregate who's buying calls, well, the market makers can then unhedge. They unhedge by selling their GME. They originally were hedging by buying GME because so many people were buying calls and they didn't want to be on the hook for that. And then when they get out, so it's truly just the fact that so many calls were unloaded. Yes, you could take a little bit of a look at puts, but puts have not been moving in this time frame. It was very much because of calls. And maybe you're thinking to yourself,
hey man, I know it's shorts because the internet tells me it's shorts.
Actually, we can track the short interest. The short interest back when it started moving in May was in the realm-ish of 25%. And then on the second spike in early June, it was in the realm of 20. And now the short interest is around 11. It's around 12. The short interest has actually just been going down, as in shorts have been covering. When shorts cover, that's buying pressure. That's actually been helping push it up slightly. The short interest right now, as I just said, is around 12. Just so you guys know, back in 2021, it was around 130, 140. It was literally more than 100% higher than we currently are. I know right now there's some falsehoods going out of like the short interest is higher. What people are talking about is short volume. Please understand that short volume and short interest are two very different things. In fact, their only similarity is just that they have the word short in it, but short volume really has nothing to do with short interest whatsoever. So the price going down, I mean, we have the metrics. Price going down was because of the lack of aggressive call bets. That's all it is. It's like there was a bunch of call bets, a bunch of excitement with the stream, the annual shareholder meeting, all the memes. People were YOLOing into calls, and you see it's literally called a gamma squeeze. And then when that stopped, obviously price comes down. So in terms of what to expect going forward, it depends on who you are. It depends, are you gonna be more of a short-term player? Are you playing on the options market, or are you gonna be an investor? And I think there's valid cases for both. So one of them, let's honestly just talk about, okay, I'm a short-term player, maybe you're going to the upside, to the downside. What I would say is, now that we know options are moving the price, simply watch what's going on. On the screen right now, and shout out to Spot Gamma, this is the options data from them. The white line is the recent price movement of GME, and then the green/teal line and the purple line is actually the delta. And the delta is a measure of the bullishness and or bearishness in the options market. If it's going up and up and up, that's bullish. If it's going down and down and down, that's bearish. So over the past roughly week, well, this is what happened with the annual shareholder meeting. You just see that the delta is getting absolutely crushed, and it ends up dragging the price with it. So what I would do if I'm watching in the short term, if you're like, no, I really want to get into calls or puts, pay attention to the delta. All of a sudden, we know that options are really moving the price. So that's what you should be looking at. Now, on the other side, if you're like,
you know what, man, I actually just like stock and I'm just waiting for like an investment.
Okay, that makes sense too, because I see that they have $4 billion in cash. And this story, it's not the exact same, but there's a lot of similarities with what Warren Buffett did with Berkshire Hathaway. Maybe you do know this, maybe you don't know this, but Berkshire Hathaway was originally a textile company that Warren Buffett bought, and then he ended up just transforming it into like the legal, I guess, conglomerate that ended up becoming his whole like investment vehicle. I don't think that's completely out of the question for Ryan Cohen and GameStop. The board and really the shareholders have already approved Ryan Cohen to trade with the company's money. The company now has $4 billion in cash. So I wouldn't be surprised if GameStop, like Berkshire Hathaway, just becomes the legal entity and it's more of like really just an investment vehicle. So as a long-term investor, that's the thing I'd be paying attention to. I would see if fundamentally if that improves the business. In the short term, I would very much be paying attention to the world of options. But I just wanted to answer some of these questions on like the falsehoods of this, that, the other thing. Right now, there's just not that many shorts. The action of what's going on seems to be the extreme excitement or lack of excitement in the world of options. So if I were a short-term trader, I'd be paying attention to options. And then if you're a long-term investor, I'd be paying attention to, oh, okay, is that what Ryan Cohen's gonna actually do with the company? Now, regardless, if you're looking at this, if you're looking at stocks or options, and I'm trying to be a little bit broad here because depending on the viewer that you are, you might have a different interest. Regardless of what you're doing, there's gonna come up a very fair, reasonable question at one point in time, where should you be getting it? Because you're probably hearing about payment for order flow, internalization, should you be playing your stocks or options to begin with? And in all reality, the perfect place to do it is right here. Shout out to public.com for sponsoring this portion of the video. If you're an options trader, planning on becoming one, or just generally interested in the markets, you're gonna wanna listen up. For those of you who don't know, public.com is my favorite place to trade options. If you're wondering why, the answer is simple. it's the most cost-effective place to trade options. In fact, you can earn a rebate on every options contract that you trade. That means that you get paid a rebate for each time you buy and each time you sell for each contract you're trading. I love it because it allows me to focus on my actual trading rather than the headache that is trading fees. Now, beyond options, Public.com offers you an entire suite of tools. They offer exposure to stocks, options, bonds, crypto, and even have a high yield account that's currently sitting at 5.1%. With all of these offerings, no commission fees, and no per contract fees with options trading, I'm confident you'll enjoy Public.com as much as I do. So if you want to check it out, go to public.com/MattKohrs or just click on the link in the description of the video. Thanks again to Public for partnering with us, the Goonie community. As a quick side note, I really do love Public. You're avoiding payment for order flow if you're talking about stocks or equities. And if you're trading options, I know of no other brokerage on the entire planet where you get a rebate to trade options. So it's by definition, the most cost-effective place to trade options. But that really is a perfect segue into what's going on. Now, I posted a video a couple weeks ago. I think it was titled, "Seriously, Don't F This Up." The purpose there was know what you are. Are you a trader or are you an investor? Depending on what you are, and this isn't just true for GameStop, but we'll be using GameStop as an example, stick to it. If you like GameStop as an investment, great. You don't care about the day-to-day movement. Sure, you might get excited, or maybe if it goes the other way, you're not that excited, but you're looking multiple decades out. So the movement right now doesn't matter, and also you're probably not considering options. Now, if you're a short-term person, you might be considering stock or options, but just nothing's happening at this exact moment. What are the current catalysts? This is very much a community-driven, exciting type of a thing. So if you're looking for that opportunity to strike, just pay attention to options, because we now know that that is the exact data that's causing this to go up or to go down. So if you're in the short term, I mean, to me, it's an absolute evident no-brainer that you have to be paying attention to options. And for me, I wouldn't be getting in until I see things happening. Right now, there was a lot of excitement to the upside, and then there was a little bit of sadness coming down, and things are kind of flat right now. So it's just a game of patience. It's a game of waiting, which means if you're waiting because nothing's happening, you probably want to just be watching options and not actually in options at this exact moment. Now, obviously things can change on a moment's notice, but all I would be doing, especially in the short term, is just waiting. And then if that opportunity does come, and this is what I've been preaching from the high heavens, if you're in it for the short term, I'm not talking about you diamond-handed long-term investors, but I'm talking about the short-term traders, stay in as long as the trend is evident. So GameStop had a clear, evident trend to the upside. Then it stopped. Then it had another trend to the upside. If you played both of those, you would have locked in really good money, and then the trend broke down. So what you're doing is be in the play as long as the trend is clear, concise, and obvious to you. Now, you could define that however you want. A lot of people use various indicators. You could use trailing stop loss. That's up to you. That's not really the main purpose of this video, but as long as the trend is in your favor, be in the play. If the trend is breaking down and you're just praying that it's going to help out, you have to understand that with things, especially in the world of options, data could easily eat you alive. So sometimes you have to consider the pros and cons of, yes, I get that options are leveraged, but on the other side, stock doesn't have that, but you also don't have data decay. So if you're playing something, especially in the world of options, because I'm seeing a lot of people get crushed right now because of the lack of movement, you're getting eaten alive by data. So in the world of options, that means just wait and be patient and sit on your hands until something truly exciting happens. Other than that, you have no position at all, like what I'm currently doing, or you could just be sitting on stock, but then that might be a little bit more reasonable if you like the long-term prospects of GME. So that's the current update of just, I guess, the second chapter of this meme stock mania. What happened, how we got to here, the current metrics, a lot more related to options than anyone's really talking about. And what does the future behold? Well, no one knows. My crystal ball currently not working, but I would be willing to bet that there's definitely going to be some craziness on the horizon, but that doesn't mean you hop in right now. It means you wait until you actually see those underlying metrics for the opportunity to strike. Now, obviously, these are my own thoughts and opinions. So if you have any thoughts of opinions of your own, or even comments, let me know. More than happy to answer any of the questions you have. Let me know in a comment below. I appreciate your time. I'll catch you in the next video.